Tesla made good money. Advice is acceptable. Shares have increased. In a crucial quarter for the leading manufacturer of electric vehicles, Tesla reported strong results. However, later this evening, investors will want to learn more about demand and profit margins. Tesla TSLA 0.38%, ticker TSLA, whetted investors' appetites before the results conference call with details regarding production and a new lower-cost car platform that can improve growth in the future. Earlier this year, Tesla shocked the world's auto industry by lowering prices by as much as 20% to boost sluggish sales. It was able to do this because it can produce EVs at a lower cost than other EV manufacturers. As it looks to strengthen its position as the top EV manufacturer in the world, Tesla may use the more affordable platform as its next shot. With sales of $24.3 billion, Tesla announced fourth quarter earnings per share of $1.19. Operating profit increased from the previous record of $3.7 billion in the third quarter to a record high $3.9 billion. Wall Street anticipated operating profit of $4.2 billion from $24.7 billion in sales and earnings per share of about $1.13. The quarter's free cash flow totaled $1.4 billion. Analysts anticipated $2.7 billion. In the future, Tesla said it intended to build 1.8 million cars in 2023. About 1.9 million units are required for the street. The numbers are all correct. Soon after the findings were announced, shares increased 3.8% and reached approximately $150 per share. At $144.01, shares are currently down approximately 0.3%. The price of Tesla stock rose 0.4% to $144.43 on Wednesday. Both the S&P 500 and the Dow Jones Industrial Average closed the day unchanged. Despite the modest response, Tesla stock is still in trouble. At 5:30 p.m. Eastern Time, the company's quarterly conference call will begin. EV competition, production, profit margins, and new product information will be of interest to investors. They'll demand a status report on everything. Tesla provided some information for investors in the earnings release prior to the call. By the end of 2022, Tesla's new factories in Austin, Texas, and Berlin, Germany, were turning out roughly 3,000 vehicles every week. That is an increase for Berlin from the roughly 2,000 autos each week at the end of the third quarter. The previous time Tesla disclosed earnings, Austin's weekly manufacturing rate wasn't given. Tesla added that work is already underway on its next-generation vehicle platform. That EV is less expensive, which is what investors have been searching for. It will increase the potential market for Tesla. Investors have a lot to process. Investors must always pay attention to Tesla's earnings releases. The company's Q4 earnings announcement may be the most significant in its history. The organization has seen other most significant quarters in the past. During its first full quarter as a publicly traded business in 2010, Tesla announced sales of the original Roadster of roughly $31 million. There were the years between the commencement of the F-Pioneer's Model S, which was its first mass-produced automobile, in 2012, and the release of the more affordable Model 3 in 2017. Additionally, Tesla reported an unexpected profit in the third quarter of 2019. One may argue that the upcoming fourth quarter report surpasses them all. Tesla is currently the most actively traded company on the American market, but it is operating in a more challenging economic climate due to rising interest rates, elevated inflation, and worries of a recession. Investors are particularly apprehensive of CEO Elon Musk's new position as owner of the social media platform Twitter, and EV competition is still increasing. EV must reads more. The most valuable asset in the automotive industry is the brand. It isn't the most powerful. Prices were cut by the F-Pioneer. Why the cuts are stressing out rivals. Bull and Bear had a debate. They both made mistakes. Elon Musk, in my opinion, does not exist in reality. It's time to reflect. Tesla's profit margins are unpredictable as a result of price reductions. Tesla's automotive segment produced gross profit margins of roughly 26% in 2022. Following the price reductions, predictions for automotive gross profit margins for the entire year 2023 should drop to between 17% and 22%. According to FactSet, Operating profit projections for 2023 range from around $9 billion to $30 billion. Even for Tesla, that is a big range, thus 2023 should be very volatile for the stock. The forecasted operational profit range of $21 billion is around 140% of the average estimate of $15 billion. The estimate range in the beginning of 2022 was around $13 billion, or 100% of the average projection. Investors should be prepared for trade turbulence on Thursday regardless of what Tesla reports. Following the results report, options markets predicted 10% up or down movement in the stock. Following the last 4 quarterly reports, shares have fluctuated by an average of 8%, either up or down. Over that time, shares have increased and decreased 4 times. Tesla stock has increased roughly 17% so far this year as of Wednesday's trading. About 8% have been added to the Nasdaq Composite Comp minus 0.18%.